Negative news from China deteriorated market sentiment. The global oil benchmark slumped on Friday morning, giving up the early gains after a multi-day rally. The Russian currency is also extending losses amid worsening background and falling oil prices. Today, the ruble opened the session with a sharp drop against the US dollar. China has always been among the major players on the global economic arena. However, today, Beijing decided to abandon its annual economic growth target for 2020. This news is viewed as a negative for oil, as it may indicate that China's economic activity will restore at a much slower pace than was previously expected. Brent oil futures for July moved rapidly to the downside, losing 5% from the previous close. Brent crude was last seen trading at $34.23. WTI oil futures for July were down by almost 7.5% at one point. The American grade settled at $31.40 a barrel. The fall of Brent crudes below the level of $35 may pose the risk of a further decline. It's even possible that the price may pull back to the area of $28 and $32 per barrel. A new round of escalation in the US-China trade conflict raised fears among traders. Recently, Beijing has announced its plans to introduce a new national security law in Hong Kong. This means that the persistent standoff between the two countries may become even more harsh. The new conflict is likely to wane on the American WTI. West Texas Intermediate has gained 80% since the beginning of May, while Brent has added 43%. As always, the worsening of US-China relationships has affected the emerging market currencies, including the ruble. On Thursday, the ruble failed to break through the mark of 70.80 against the US dollar and is unlikely to succeed today. The prevailing negative sentiment in the markets and leading oil prices will continue to push the ruble down. In the early trade, the dollar-ruble pair gained 1.3% compared to the previous close. The US dollar is heading for the mark of 72 rubles. By the end of the session, traders may want to hedge the ruble deals on assets of federal loan bonds through buying foreign currency. The dollar-ruble pair may finish this week settling above the level of 72, since the ruble has neither local nor fundamental support. In case the situation gets better in the energy market, the ruble will have a chance to hold firmly at the level of 72. Still, ahead of the weekend, the downtrend on the ruble is far more possible than the uptrend. The Russian currency remains very sensitive to external factors, which may worsen at any time amid the escalation tensions between the United States and China. Investors hope that the ruble will stay moderately strong thanks to increased demand for Russia's debt securities. Besides, the Bank of Russia is widely expected to cut the key interest rate during its policy meeting in June. Today, on the local front, market will keep an eye on the press conference given by the head of the Russian Central Bank. That's all for now. We wish you profitable deals. See you in our channel with a new video in a couple of hours.